How to start your business in the USA remotely. U.S. company registration for a dropshipping business. Dropshipping is a very popular modern business concept, and US-based dropshipping businesses became the driving force of the location-independent entrepreneur phenomenon. Much has been written on the mechanics of the dropshipping business itself, so this article will only cover the aspect of U.S. company registration, taxation, banking, and other related business filings. Running your dropshipping business under a U.S. company has many advantages, and given the relative affordability and ease of registration and maintenance of U.S. companies, it is highly recommended to organize your business using a U.S. legal entity such as LLC or corporation. Let's explore some of the questions related to U.S. company registration specifically for your dropshipping business. Choice of state. Since a dropshipping business owned by you, a non-US based entrepreneur, has no physical connection to any specific state, you have the freedom to select any of the 50 U.S. states and D.C. as the home state of your U.S. company. It is recommended to form your company in one of the incorporation-friendly states, such as Delaware, Wyoming, or Nevada. Majority of our clients choose either Delaware or Wyoming, due to more expensive fees in Nevada. Because a dropshipping business essentially deals with tangible goods, the question of sales tax becomes relevant, and as a result many dropshippers opt for registration in one of the states that have no sales tax. We cover the issue of sales tax as part of our article U.S. Taxation for Foreign Entrepreneurs, Sales Tax, and it is more complex than just picking a no sales tax state. However, a decision to register in one of the no sales tax states is not without a degree of merit. Delaware, being a no sales tax state, is often the state of choice for dropshipping business registration. However, it is important to note that the registration and maintenance of a company in Delaware are relatively costly, making some other no sales tax states an attractive alternative. These states are Oregon, Montana, Alaska, and New Hampshire. It is also important to note that Wyoming, despite having a relatively modest sales tax, is still an attractive state for dropshippers due to the fact that it is the least populated state, which means the chance of needing to worry about collecting and remitting sales tax in Wyoming is negligible. Choice of entity. Foreign dropshippers can choose primarily between two types of entities, LLC and C corporation. LLC is the most common type of entity chosen by our foreign clients due to its simplicity, flexibility and single taxation. C corporation mostly chosen by young entrepreneurs looking to obtain angel or VC financing. You can see a comparison between LLC and C corporation here, LLC versus corporation. It is important to understand that as a foreigner the choice between LLC and corporation typically comes down to how one wants to be personally taxed. We cover many questions of taxation in our article U.S. Taxation for Foreign Entrepreneurs, and would like to invite you to go over that article, as well as consult a U.S. tax specialist, prior to making a decision on which type of company to register. There is one tip that is worth giving here. You certainly can't go wrong with registering an LLC, simply because an LLC is such a flexible entity in terms of taxation that if you at some point decide that you would rather have your company taxed as C corporation, you can just file a C corporation election for your LLC with IRS. You don't get such flexibility with corporation. Additional information and things to consider. First of all, to register a company in the U.S. you don't need to present any documents, only information. Documents would be necessary in case you want a U.S. address or need to open a bank account, but not for company registration. You also don't need to be present in the U.S. to register a company. All filings can be done remotely, with us serving as your proxy in the U.S. in almost all cases. When we need a signature from our clients, this can be done electronically. Other important things that many foreigners are concerned about: as a foreigner you are not required to have Social Security number to open your company and obtain EIN, company tax ID. You also don't need to have a U.S. address or phone number, However, if you like to have U.S. address and/or phone, it's possible to obtain them from specializing vendors. See phone vendors here, and our U.S. address solution here. You do need to hire a registered agent that is located in the state of registration. However, this is a standard service that we provide in all 50 states and D.C., so there is no need to worry about it. Just make sure to select this item on the form. Banking in the U.S. is a more complicated topic. There are some companies on the internet that promise international clients help in opening a bank account remotely, but we warn our clients to be careful with those who claim they can help that way. To learn more about banking in the U.S., associated problems, and possible solutions, please read our article Opening a Bank Account in the United States. Finally, international clients would need help filing their U.S. company taxes. We addressed this issue in our article U.S. Taxation for Foreign Entrepreneurs. Comparison between LLC and corporation. The following table gives side-by-side comparison of 3 most common forms of business organization: C corporation, S corporation, and LLC, limited liability company. Note: LLC is the most flexible type of business entity thanks to the fact that LLC members can keep the company taxed as partnership, or disregarded entity if single-member LLC, both default forms of taxation, or instead elect it to be taxed as S corporation or even C corporation, if company owners' taxation goals work best with these types of taxation. Any corporation is taxed as C corporation by default, and can be elected to be taxed as S corporation, provided all shareholders are U.S. persons, etc. Read here for a list of requisites for S corporation. Quick comparison: LLC versus C corporation. The entities are taxed differently. By default, an LLC is a pass-through tax entity, meaning that the income is not taxed at the company level. However, a multi-member LLC is still required to complete a separate tax return. The income or loss as shown on this return is passed through the business entity to the individual members, and is reported on their individual tax returns. C corporation is a separately taxable entity, and pays tax on the income prior to any dividend distributions to shareholders. If and when corporate earnings are distributed to shareholders in the form of dividends, the corporation does not receive the reasonable business expense deduction, and dividend income is taxed as regular income to the shareholders. The entities differ in their structure. LLCs are less rigid in their structure than corporations, so you have more flexibility in adapting the LLC to your unique business. The operating agreement of an LLC can be structured in a limitless number of ways. Formality. A corporation is a formal entity with officers and directors, at least one of each, required. An LLC, on the other hand, can be member-managed and run in a less formal way. For small, startup businesses, less formality means you can focus on making money rather than administrative work. Quick comparison: LLC versus S corporation. Difference in income allocation. While S corporation's special tax status eliminates double taxation, it lacks the flexibility of an LLC in allocating income to the owners. An LLC may offer several classes of membership interests, while an S corporation may only have one class of stock. Ownership restrictions. Any number of individuals or entities may own interest in an LLC. Also, LLCs are allowed to have subsidiaries without restriction. Ownership interest in an S corporation is limited to no more than 100 shareholders. On top of that, S corporations cannot be owned by C corporations, other S corporations, many trusts, LLCs, partnerships, or non-resident aliens. Self-employment taxes. One advantage of S corporation is the way self-employment taxes are calculated. S corporation owners employed by the company must receive salary, and their self-employment tax is calculated based on that salary. This is true with the exception of S corporations based in New York City. Owners of LLC, on the other hand, pay self-employment taxes based on all member distributions they receive. Quick comparison: C corporation versus S corporation. All corporations start as C corporations and are required to pay income tax on taxable income. An C corporation becomes a S corporation by completing and filing Federal Form 2553 with the IRS. Taxation. An S corporation's net income or loss is passed through to the shareholders and are included in their personal tax returns. Because income is not taxed at the corporate level, there is no double taxation as with C corporations. Difference in income allocation. Subchapter S corporations, as they are also called, are restricted to having no more than 100 shareholders, and cannot be owned by C corporations, other S corporations, many trusts, LLCs, partnerships, or non-resident aliens. Incorporating in Delaware versus Nevada versus Wyoming. Comparison between incorporation-friendly states. It is commonly recognized today that Delaware, Wyoming and Nevada can all be called incorporation-friendly states due to their cooperative laws, relatively low fees, and limited or non-existent state-level taxation. However, how would a person choose between the three? Note: it is important to understand that in many cases the right choice of the state has to do with physical location of the business, and not with arbitrary choice of more attractive state. Before making any choice, we recommend you to first read our article dealing with choosing where to incorporate. Summary and conclusions. In general, Delaware, through its developed legal system and laws protecting shareholder rights, is geared toward the large complex public corporations, whereas Nevada and Wyoming are more attractive to the small privately held corporations and LLCs. Delaware law tends to protect the rights of boards of directors and shareholders, while Nevada and Wyoming tend to favor management. Does the above comparison mean Delaware is not the best place to incorporate? Not necessarily. The choice to incorporate in Delaware depends on the long-term goals of your company. Delaware has an excellent body of corporate case law spanning 110 years regarding such matters as management, shareholder issues and mergers and acquisitions, and that's precisely why the Fortune 500 are drawn to this state. Delaware laws tend to be pro-management when it comes to minority shareholder disputes. Huge public companies have literally hundreds of such disputes pending in the courts on any given day. So if you are aiming to grow your company to become a Fortune 500 company, or at least planning it to attract VC investors and possibly go for IPO one day, Delaware's case law offers many insights into what you can and cannot do, and what the likely consequences may be. Unfortunately, Delaware also has corporate income tax, personal income tax, a state franchise tax, reporting requirements and regulations compelling disclosure of substantial amounts of information resulting in far less privacy for you. That makes Nevada and Wyoming much more attractive for small privately owned businesses. Nevada or Wyoming? Things to consider when choosing between the two states. 1. Information sharing with IRS. Nevada is famed as the only state that does not share information with the IRS. Although that fact by itself is true, there are few things that you should know about it. First of all, Wyoming does share information with the IRS, but only the information given by companies with real assets inside the state. So if you don't have any real estate in Wyoming, you are as protected in that regard as in Nevada. Second, Nevada makes IRS mad. That means if you are in Nevada, the IRS is targeting you because you are in a non-friendly state. 2. Piercing of corporate veil. The corporate veil separates the assets and liabilities of the company from the assets and liabilities of its owners, thus protecting owners from business risk. Nevada offers the best corporate veil protection available. Wyoming also has well-established criteria concerning the piercing of the corporate veil. Where fraud is not present, a Wyoming corporation that does not commingle funds and maintains some form of corporate formalities, including holding meetings of shareholders and directors, will not be pierced. Many professionals consider Wyoming to be inferior to Nevada in that regard, with others claiming the differences are negligible. 3. State taxes. There are no state income taxes on individuals or companies both in Nevada and Wyoming. However, Nevada is now considered the worst state to do business in by the Nonpartisan Tax Foundation that has pointed to the new changes to Nevada taxation. Recently, annual list and business license fees, which were already the third highest in the nation, were increased to $350 for LLCs and a whopping $650 a year for profit corporations. Nevada also has a new commerce tax on your gross revenue if your combined gross revenue of all of your Nevada business entities is over $4 million per year. In other words, the state will combine the income of multiple corporations of any common owner and apply the commerce tax if the combined revenue reaches the $4 million threshold. Wyoming is not considering any business income tax and does not need to, since Wyoming has a multiple-year budget surplus. 4. Continuance, moving your company to another state. Wyoming is one of only 2 states that provides for true continuance in its corporate laws. Many states provide for domestication, but that is not the same thing. If a foreign corporation decides to domesticate in another state, it either creates a new corporate entity in that state or it adds additional domiciles. However, in Wyoming, continuance is a process by which Wyoming creates the legal fiction that the corporation has always maintained its domicile in Wyoming. Your existing corporation can retain its original incorporation date after becoming a Wyoming corporation. Anyone examining the Wyoming public record will see a corporation dating back as far as your current corporation does. You can promptly become a Wyoming corporation without losing the many benefits of the longevity and continuity of operation. MyUSA Corporation is your reliable partner since 2009.